Hello and welcome to Stoxies. Today we will talk about one of the most famous companies in the world, Nike, the iconic brand associated with strength, innovation, and sports culture. However, in recent years, Nike has not had its best period. Falling revenues, pressure on profits, and fierce competition raise questions. Is now the time to invest in Nike, or is this a trap? By the end of the video, we will have seen the most important data, what the experts say, and of course, I will want to hear your opinion. Stay tuned until the end of the video and you will not regret it. Let's get started. Nike was founded in 1964 as Blue Ribbon Sports and renamed Nike in 1971, inspired by the goddess of victory, Nike. Since then, it has become synonymous with athletic excellence and lifestyle. The swoosh logo and slogan, "Just Do It," are global symbols of success, passion, and effort. Nike's strength lies not only in its products, but in its relationship with people. From Michael Jordan to Serena Williams, the company has linked its brand with legendary athletes, creating an identity that transcends commerce. However, even the most powerful companies are not immune to market challenges. Fiscal 2025 was a tough year for Nike. Total revenue was about $46.3 billion, down nearly 10% from the previous year. In the fourth quarter, revenue was about $11.1 billion, down 12%, while net income fell dramatically, as much as 86% to $0.14 per share. Despite the pressure, Nike remains financially sound, with more than $10 billion in cash and about $7.5 billion in inventory. However, high inventory and the discounts used to reduce it have significantly affected margins. The stock has fallen significantly in 2025, creating concern but also potential opportunities for those with a longer-term view. Analysts are divided. Of the 17 major analyses monitored internationally, 8 recommend buy, 8 hold, and only 1 sell. The average price target is around $72, which indicates a possible recovery. Telsey Advisory Group recently raised its target to $75, focusing on new product innovation. Morgan Stanley also raised its target to $70, while major houses such as Goldman Sachs and UBS see a prospect of even $80 per share. On the other hand, there are more cautious voices who believe that Nike is already overvalued for its current growth. Most agree, however, that the key is the turnaround strategy implemented by management. Fewer discounts, improvement in the supply chain, and a focus on the core of the brand, sports. What are the reasons to buy Nike now? First, the strength of the brand. Few companies have such global recognition and such a loyal consumer base. Even when finances are tight, the value of the brand remains enormous. Second, the diversification of revenue. Nike is not just dependent on sneakers. It has a strong presence in apparel, accessories, and its own after-sales channel, which continues to grow. Third, its financial stability. With high liquidity and a strong balance sheet, it can withstand periods of pressure and invest in innovation. And fourth, the possibility of recovery. If the changes implemented by the new management pay off, Nike can return to growth rates, offering significant capital appreciation to anyone who invests now. But it's not all rosy. Nike faces a number of challenges that shouldn't be ignored. First, its high valuation. Although the stock has fallen, it still trades at a high price-to-earnings multiple, so real growth is needed to justify the price. Second, its excessive inventory. The discounts the company has had to take to reduce it have hurt its profit margins. If this continues, it will struggle to return to its old levels of profitability. Third, slowing global demand. Consumers are cutting back on spending on premium products, especially when the economy is struggling. Fourth, competition. The anti-sneakers market has made a strong comeback, while new brands like On Running or Hoka are capturing the attention of younger consumers. Finally, there is the risk of strategic failure. If the changes promoted by management do not pay off soon, investor confidence could be shaken even further. In summary, Nike is at a critical but interesting juncture. The financials show pressure, but the company has the means and the brand to bounce back. Analysts are divided, but the prospect of recovery is there. For those thinking in the medium term, Nike may be a bet worth considering, but be aware of the risks. What do you think? Is Nike an opportunity now, or should we wait a little longer? Would you dare to invest in such a well-known but stressed company? Tell me your opinion in the comments. And if you liked the analysis, subscribe to the channel and press the bell so you don't miss the next videos with investment analysis.